Welcome to the Retzel Health Law Hotspot. Health Law Hotspot is a podcast for physicians and health professionals that covers the legal issues and trends that affect the healthcare industry.
This is John Waters for Retzel and Andrus. As most healthcare professionals are aware, there is a growing trend in the marketplace for the acquisition of medical, dental, and other healthcare practices. What most practice owners are not aware of is that by properly structuring their practice before a sale, they can minimize their tax costs and maximize their return. Planning for a sale should take place well before any offer to purchase your practice is on the horizon, as by the time an offer occurs, it may be too late to take steps that would have saved taxes and maximized your return. Also, the structure of the sale itself can affect the seller's taxes. An optimal structure is one that will meet both the buyer's and seller's tax objectives. In that regard, you should be aware that a tax goal of most practice buyers is to recover their costs of your practice through depreciation deductions. That means they will either want to purchase your practice assets or structure a transaction where the tax law gives them the same effect as if they purchased your assets. From your perspective, an optimal structure is one which avoids double taxation of the income from the sale, allows most of the purchase price to be taxed to you as a long-term capital gain, and allows for a deferral of gain to a future year. In assessing whether your practice structure is optimized for a sale, the first thing to determine is whether it avoids double taxation and permits for long-term capital gain to be taxed directly to the owners. Keep in mind that the main assets of a healthcare practice are its goodwill, accounts receivable, and equipment. A sale of goodwill generally generates capital gain. A sale of equipment typically generates ordinary income due to the recapture of depreciation deductions, and a sale of accounts receivable generates ordinary income. Certain entity types allow for capital gain from the sale to pass through directly to the owners. These pass-through entities generally include limited liability companies, taxable as sole proprietorships or partnerships, and corporations that have elected with the IRS to be taxed as S corporations. Because pass-through entities also provide for any ordinary income from the sale to flow through to the owners, proper consideration of what assets are sold or retained and available losses and deductions should be taken into account. Income generated by a corporation is effectively taxed twice. Once at the corporate level at a current federal income tax rate of 21%, and then again when it is distributed to the shareholders. State income taxes also need to be considered, as there can be considerable differences in the tax rates depending on the nature of the seller. For example, Illinois currently taxes corporation income at an effective rate of 9.5%, whereas it taxes S corporations and partnerships on their income at a rate of 1.5%. If the sale is structured as an installment sale, where the purchase price is paid over more than one tax year, under federal tax law you can defer part of the capital gain until a future year. A sale of accounts receivable is not eligible for installment sale reporting. However, if the seller is a cash method taxpayer, by retaining the accounts receivable, it may defer income until they're collected. Federal income tax law requires that the parties allocate the purchase price among the assets being sold based on their fair market values. In an installment sale, the parties may allocate the payments between gain eligible for installment reporting and gain not eligible for installment reporting. Those allocations can have a significant impact on the tax results of a transaction and should be done with professional assistance. Accordingly, with proper structuring of your practice and the terms of the sale, you can optimize your return on a sale of your practice. This is John Waters from Retzel and Andrus, and if we can be of any assistance in structuring your practice and assisting with a sale, please contact us.
The Retzel Health Law Hotspot is made available by the firm and its attorneys for educational purposes and to provide general information, not to provide specific legal advice. Use of the Retzel Health Law Hotspot does not create an attorney-client relationship between you and the firm or any of its attorneys. The Retzel Health Law Hotspot should not be used as a substitute for competent legal advice, and you should contact an attorney in your state about any legal needs or questions you may have.